Thank you all and welcome to our masterclass today. So today we are going to talk about how to invest in the stock market, in the Nairobi Stock Exchange market. And basically during today's topic, we are going to see how we can be able to build our wealth and also create a very good portfolio so that you can be able to invest in your daily life. So, to start with, in our discussion today, we are going to talk about what is a stock. I know most of you know different investment assets, but today I'm going to explain what is a stock, why you should be able to invest in stocks, how do you invest in stock, and the type of stocks which are available, what are the do's and don'ts basically in investing in stock market. And then in case of any questions, you are free to chat them, put them in the comments so that I can be able to respond to them as we get by. So a stock is basically a small unit of ownership in a company. So if you want to own one of the biggest and successful companies, what you do is that you buy a stock so that you be part of the ownership of that company. So when you buy a share or what we call a stock, you become the owner of the company and you can benefit from the company growth. So whenever the company grows, it means also the value of your investment, the stock also grows. So the key players in the stock market, we have four of them. So we have the key ones, the regulators and the stock infrastructure. So basically, these are the people who regulate the market. They set rules and regulations on how the market is supposed to be conducted. So the first one is the Capital Markets Authority, commonly known as CMA. Then we have the Depository and Settlement Corporation, the CDS, and then these are the people who are able to make settlements of these stocks. So whenever you sell, they are the ones who do settlement or who basically sell and be able to either give you cash or buy more. And then we have the Nairobi Stock Exchange, uh, commonly known as NSE. They are the ones who are able to register or list companies in the stock market. Then now we have the brokers and the investment banks. So basically, these are the people who do advisory and they are able to invest or they act as intermediaries. So for the stocks, you cannot be able to buy them directly from the NSE. You have to go through a broker. And this broker has to be registered with the Capital Markets Authority and also the NSE. So they are the ones who basically retail these stocks in the market, who enables you to buy and sell these stocks. Then we have the listed companies. These are the companies which have been listed in the stock market. And for a company to be listed in the stock market, they have to do what we call initial public offering, commonly known as an IPO, so that the stock market, the Nairobi Stock Exchange, is able to review the IPO of that company. And if they qualify, they are listed in the stock market. And then lastly, the key shareholders, basically, these are the people who now buy these stocks. So we have institutions like pension funds, banks, insurance companies, and such. Then we have individuals. As an individual, you can be able to buy stock in the market. And then we have the government. The government also buys the stocks because it's also part of the income that goes to the exchequer. So these are the key players in the market, and I think it's very important you know who is involved in this market. Then why should you invest in the stock market? So basically, the main aim is to grow your savings. You want to invest today 10,000, and then after a few years, you want to have that money increased. We want to also develop an habit of investment. So basically, investing in stock market helps you to develop that habit of whenever you have money you don't waste, you basically invest that fund. To earn passive income, you can earn passive income through dividends or buying and selling these shares in the market. So basically, through that, you can be able to earn some passive income. And then for long-term wealth building, which is also very, very key, you want to build your wealth. So basically, investing in this stock market helps you to build wealth for a long time. So how do you invest in stocks? So number one, you have to choose a licensed broker. And a licensed broker are basically brokers who have been listed and registered with the Nairobi Stock Exchange. You also have to register and download an app if that broker has an app. So you have to register with the broker so that you are able to buy the stock. You have to fund your account. Once you open your account, you have to fund your account. So once you register with the broker, they'll give you an account that we call a CDS account, which now enables you to buy the stock. But before you do that, you have to deposit some money in your account, and then now from there you buy the stock. After you buy the stock, you need to monitor your portfolio. You need to monitor the stocks that you have bought regularly, so that you are aware on the growth, you are aware of the risks that are there, so that you don't end up losing your stock. So these are the top registered stockbrokers in Kenya. And as for now, we only have 10 licensed brokers which are able to help you buy stock in the stock market. So we have all of them listed here. They are Prayer Investment Bank. We have ABC Capital Limited. We have Kestel Capital. We have Francis Downmode and Company. We have EFG Hammers. We have Kingdom Securities of Kenya. We have Old Mutual Securities, we have Santra Investments, Securities Africa Kenya, and then we have AIBI AXYS Africa Limited. So these are the people who are able to help you buy the stocks in the stock market. Like an example, then how do you go about? You have identified a broker. Let's say it's Day and Player. Day and Player has a mobile app where you can be able to basically download the app from the App Store or the Apple Store, and then from there you register, and then you start investing the stock. So basically, it's as simple as it is. That's why I'm saying that investing in stocks is just in minutes. It doesn't need you to go all the way to the offices of these brokers and open an account and deposit the funds and start investing. So the types of stocks that we have in the market, we have large and stable companies, which we call the blue chip stock. So we have the likes of Safaricom, KCB Bank, and all that. So all these are basically called blue chip stock, and mostly they are called the NSE 20 stock. So basically, these are the 20 high performing companies which have very high stakes in the stock market. Then we have the paying high dividends, basically the income dividend stocks, and mostly you see them being uh, banks, mostly the financial sector. So this where you invest you buy stocks, and then at the end of the year you are paid dividends. So and then we have the penny stocks. Penny stocks are those stocks which are very, very low in terms of prices. They are not moving. So basically most of them are below 2 shillings. We have the likes of Mumia's company, we have Uchumi, we have Everready. So you realize that these are the companies which are going through a lot of wrangles and difficulties in the market. So that's why they are called penny stocks. Um, and then how stock prices are determined. How do you know that uh, or what happens when your stock goes up or down? So mostly it's due to number one, good performance of the company. So maybe they are going to declare some good performance in terms of profits, future expectations of these companies. How is the future? Is there growth? Is there a going concern? And then the economic factors like inflation and such are also um, determine on how the stocks are priced. And then we have investor emotions, basically speculation and sentiments from individuals. So also this also drives the prices of the stock. So whenever the buyers don't really want to sell, it means it's basically the law of supply and demand. So if buyers are not willing to sell, then it means the stock prices go up. If sellers are not willing to sell, uh, then it means it means the stock market is going down. So basically, that is how this is done. And then this is basically what we call the bull and bear markets, meaning when it's a bull, it means that there are some positive factors which are basically pulling the market up in terms of stock prices. Then we have the bear markets. Basically, this is when the prices are going down, mostly because of bad performance of the company. We have maybe the the future is not determined and all that. So as we complete this, continue to comment and put your questions there. But how do you build a diversified portfolio? Basically, we have more than 160 listed companies in the Nairobi Stock Exchange. To be specific, 162 listed companies. And you need to be very, very keen to do your homework and make sure that you have diversified your portfolio. So, diversification is basically don't put all your eggs in one basket. And this means that you need to invest in across different companies and sectors and asset types. You also need to decide your investment goals. Very, very key as a financial or plan. You need to really determine what are your investment goals. Is it long term, short term? What are you looking at when you are investing? So if it's growth, you are basically you focus on stocks that may increase in value. If it's income, you basically focus on stock that are basically paying you some good dividends at the end of the year. Then if you just want to grow your wealth and increase your holdings in the stock, you need to look for a very well balanced portfolio mix, basically a mix of dividends, a mix of growth, so that you are able to grow your wealth. And then you need to really monitor and rebalance your investment portfolio. Basically, this is through regular checks. You need to also see how you can sell underperforming stock and also take up profits from high performing stocks. You need to adjust and maintain your desired allocation, because also these goals are according to your investment goals. um your first steps, then after understanding all this, is basically number one, you need to define your goals first. So don't rush to buying stocks, don't rush to looking for a broker before you define your goals. Why are you getting into the stock market? What is your motive? And then number two is basically educate yourself, know what is in the market first. Look at the stocks, look at their past and uh, uh, past performance. Look at their cyclical performance, that is basically growth, and when they are at pull and also at the pair markets. And then after that, then open what we call determine a broker, and then open a CDS account, so that you can start investing. And then start small, think long term, so that you can be able to grow your wealth. And then as I complete this, these are the common mistakes to avoid. Number one, don't expect to get rich overnight. Don't invest blindly. Do your homework, do some research. Don't invest money you'll need anytime soon, because this is not a short term investment. If you're putting in money, look at long term. Don't put all your money in one stock. Diversify. Ensure that you have diversified your investment in different sectors, in different stocks. Don't check your investment performance daily, because now this is where emotional investments come in, because today your stock might go down by maybe 50%, but tomorrow it can go up by 100%. So always don't check regularly, because that emotional uh, factor comes in terms of you selling and buying the stocks. Don't ignore the risks. If you know what the risks are there when investing in this particular company, if it's Safaricom, if it's a certain bank, Just don't ignore the risks which you have been mentioned about. So that is it for today, and thank you so much for your attention. I hope this was very informative to you, and I'm happy to take any questions. Comment, like, share, so that we are able to grow together. Thank you so much, and until next time, bye bye.